Joining me now with further analysis on those moves is Lwazi Matakane from Nedbank Private Wealth. Lwazi, thanks so much for your time this afternoon. Now, after a sour start to the week, we are seeing some green shoots following Trump's announcement regarding a ceasefire in the Middle East. China and the US seem to be closer to agreeing to that trade deal as well. What have you made of these moves? It seems like we're about to end, the first half of trade of the year for trade on a good note.
Yeah, thanks, Nolan, and good afternoon to your viewers. So, what we are seeing, obviously, is call it a dial back from policies that were enacted earlier in the year, where an emboldened U.S. president came through with quite a radical, call it a show of force towards peers and allies and the rest of the world, practically, trying to shore up the U.S. But now we are seeing, obviously, more a much tamer outlook, where we are seeing renegotiations on these deals, where the U.S. is not fixed on the July 8th, what you call it, the deadline for these tariff implementations. So there's a very different outlook on U.S. policy. There's a very different outlook on the presidency. And yeah, we are seeing Trump being more of a leader than more brash, as he has been abrasive in the beginning of his term.
Some of us call him leaders, others call him daddy, but we won't get into that. Now, we saw that the U.S. markets, S&P 500, Nasdaq hitting record highs over the past 3 sessions. Are these gains sustainable? I'm scared that we might be getting overly optimistic.
So what the market has shown, if you look at what happened since April 4th when they announced the tariffs, the rate of change where the market got back to the levels it was prior to that, to that fall, it shows that the markets are actually looking through all of the noise, through the cycle, and there's actually positivity with respect to how the U.S. earnings have actually come out. So much of the earnings outside in the U.S. have been quite positive. We know those numbers are looking backwards. However, it shows resilience in the companies, it shows resilience in the economy, and there's also been front running to the tariff policy that was enacted by U.S. companies in order to avoid, the cost increases that would then, affect margins on their end. But going forward is then the question, because margins will be affected should these tariffs be implemented at the base level. I think the base level is about 10% all around. That does increase costs for companies at the bare minimum. But yeah, we are seeing a much more different outlook. However, depends where you look on the street, there is an anticipation of some recession probabilities that are slightly above 50% into the tail end of the year. So it's a mixed outlook, largely positive, largely looking through the noise and filtering out the tariff policy that's taking place.
All right, let's bring it back home. I noticed that the rand is on the back foot today after hitting a 7th-month high against the weakening dollar yesterday. Does this have anything to do with what's playing out here at home, as President Ramaphosa fired Deputy Minister of Trade and Industry and Competition, Andrew Whitfield, who is also a DA member, also then sparking, tensions between the two largest parties in the GNU?
Yeah, so it's another series of own goals that we like to score when things are going fine for us. There hasn't been a very clear and concise, concise statement as to why the deputy for the DTIC has been, reshuffled or taken out of a job. I think if there was a better explanation as to why the president took that decision, maybe it would be accepted by the market, because then it doesn't cause all these frictions within the GNU. The positivity around South Africa has largely been the coalition or the coalescing of these parties coming together and forming a government that can keep each other accountable, that can, revive policies within South Africa. But if you're seeing these tensions, then obviously there's political instability that the market has to take into consideration, and we start seeing risk in South Africa start increasing. So it isn't a good look for South Africa Inc. With what's happening on the political front. However, if let's assume that there is a like-for-like replacement from the same political party of a candidate, then obviously that just mitigates the outlook around the political stability of the GNU.
Right. Let's get into some company news. FinTech player Lesaka making big moves and acquiring Bank Zero in a deal worth just over R1 billion. Markets seem to be liking the move. The last time I checked, Lesaka was up 15%. Just your analysis on that acquisition.
Yeah, look, I mean, Lesaka is a fintech payments company. So on a strategic level, this deal kind of makes sense if you're thinking of, creating an ecosystem where you've got SMMEs as your partners on your payment system, and you want to capture a banking license that enables you to hopefully have a business segment within banking. So at a strategic level, it actually makes sense to have this acquisition take place, and hopefully then they can use that to enclose the ecosystem where they transition their SMMEs that are on their payment platforms into a banking license. And obviously that's then a fully fledged bank within the fintech space. And it's all digital. So, it's agreed, well, the synergies within that, having a digital bank, being a fintech player, literally no costs that are related to fixed costs and a large burden of overheads. So it does look like it makes sense for them to actually go into this partnership.
All right, before I let you go, what is your stock pick? Where are you seeing opportunity?
So we're still constructive on retail, on the consumer in South Africa. We know, I mean, we've seen much of the tailwind with respect to retail and apparel. But I mean, I'm looking at TFG. The stock was trading at 170 a pop in the previous 12 months. Now it's trading at around 125 rand. Look, it's like I said, the constructiveness on the South African consumer. We've got low inflation. We've got a low interest rate environment within South Africa. This should bode well for South African consumers. And we still have that overhang of the two-pot withdrawal still taking place, as that windfall had taken place previously. Our consumers are still looking a bit healthy, but going forward, obviously, in the next 12 months, that outlook may change depending on how the local environment plays out. But we are constructive on TFG and what they can do within TFG Africa, as you saw in the results prior, where operating margins actually opened up, and the target of 14% in operating margins looks likely to be met by management. Yeah, think that's the one that we're looking at currently.
All right, thanks so much for your time and sharing those insights. That was Lwazi Matakane from Nedbank Private Wealth.